Hey guys, welcome back to the channel. Today we're gonna just talk about the market and the trades I took, and we'll talk about my strategy and what I do just to trade one pair, and that's gold. So as you could see in the market, I took a trade where liquidity was swept and I placed my PnL just on the candlestick that took the liquidity, and my stop loss was underneath it. So if market comes and goes underneath it, so that means it was not respecting my level and my trade. And I placed my TP just above the breakup structure to the upside, just because I placed it there because I know if market doesn't break out of it, it's gonna come back right back to my stop loss. But as soon as the market gave me like a 1-to-1, I moved it to break even. And as you could see, like it started breaking structure to the upside. And so I waited for three structure breaks, and I every time market breaks a structure, it creates a fair value gap or an order block. And as you could see, it broke structure to the upside. And so I marked an order block and I waited for the market to come back to that spot. And I just placed a buy limit and my stop loss was right underneath, just in case if it was to sweep liquidity down. And see, the problem is most of the traders place their stop loss right there, and they don't really see that they should give a little space for if the market wants to just sweep liquidity. As you can see, it broke structure again to the upside, and see market created an order block again, which I marked the order block, and I waited for price to come back. This was a continuous trade because you could see market is breaking structure and is creating a very nice higher high, and so it created a fair value gap, and I placed my buy limit and my stop loss right underneath, and I aimed for the next previous like high that was made by the market. You could put it there or you could put it even higher here because obviously market is in a uptrend now, and as you can see, like a market came and it just went right up. You have to obviously wait, and as soon as the market came back to that level again, it swept the liquidity of those people and it took all the sellers out and it went back up just because it knew that a lot of sellers will be selling as soon as it breaks resistance or goes underneath it a little bit, which traps a lot of retail traders that don't know how to trade. And you could see as soon as it went down, it came really quickly down. It created a fair value gap and order block. You could take a trade right here as well because you could see market went back up in that box and came back right down. It takes patience because obviously you could see for like 30-40 minutes it was just there ranging, but it gave us like a nice reward. If you place your stop loss right above the order block, you could see market came right below, but you have to hold the trade and have some patience and trust your setup. You could see market came, but it came not down like the previous, how it just came in four candlesticks. It came slowly down, but it broke the structure of the previous liquidity that was swept. And you could see it created another fair value gap just right above, which you could see you could mark that level and just wait. And obviously you can't take a trade right away. So in these type of scenarios, I take a risk and I place a sell limit right where I think my area is gonna work down. I place a sell limit and I put my stop loss right where the order block finishes, just above it, just because if it wants to sweep liquidity and come back right down. Because a lot of times now is how gold moves is because it wants to see how smart money works, and it will come to the order block, but it would neglect it and it will go up, right up, and create a wick and then come back down because it knows that a lot of order block people that have the strategy just to place on order blocks, it knows that it will come back up, and it knows that the stop loss is gonna be right on the order block ending, which a lot of traders make that mistake. They don't leave a room to let the market come there and have some space just to because it would want to sweep other retail or dump traders stop loss out and then go back down, because a lot of people have their monies placed where just because the order blocks ends there, that's why they sweep that high and then go back down. But right here you can see it just tapped that level and it just went right down. These setups don't really work every single time. Obviously in trading you need a 60 or 70% win rate just to become profitable and make a lot of money. You can't be really aiming for that 100%, that strategy that works. Every strategy has a different win rate. So this strategy or any strategy, it takes a willpower and it takes a willing to risk and trust your setup. Even if it doesn't and you have a losing month or a losing week, you still have to stick by because market sometimes wants to respect that level and sometimes it doesn't want to. And you have to create your own plan and your own set of rules. Because I see a lot of traders, they make that mistake where they will see that this strategy is not working, so I should move on to the next one, which is a bad thing because you have to at least stick by that strategy for at least 6 months and see if it's profitable for you. And they don't really back test and see what type of setups are made. So when they actually come in the market, they don't really know where the setup is being made, and they take a stupid trade, which they think it's on their setup, but it's really not. So the 3 trades I took were all bullish trades because the trend was bullish. If I was looking for a sell trade, I will be looking for sell order blocks and a fair value gap. And I'll be waiting for that market level and a perfect trade for my setup and a quality trade. I see a lot of people taking trades on different strategies, which is fine, but you have to at least master one, not be like a jack of all trades, which will never work for any type of business or any type of strategy. You have to at least test it out for 6 months before you say, this doesn't work for me. And I see people, I think last year, gold was different than how it is now. And you have to have a lot of patience just to wait for your setup. And how Trump is moving the market is because the whole war thing that's going on, and it is a lot of volatility and a lot of market manipulation that is happening in the trades. And just have patience and stick by your strategy. That's what I will recommend. And you could see that it's an uptrend and then it's a downward trend, which really depends on how the daily bias is. And always trust your bias than going in blindly in the market and not being able to see where the trend is going for that day. I will catch you guys very soon again. This was my trade recap for this week. The 3 setups that I took and some knowledge, just basic knowledge for trading. I will be coming out with longer videos. I'll probably post like an hour or 2 hour video for how to teach you guys. I'm getting consistent views now. Let's see where it goes. Take care, and I'll catch you guys later for the next video. And one more thing, like the video and subscribe to the channel.